So I got an email, June 30th, 2021. And it's from the Consumer Financial Protection Bureau, which I found interesting that they emailed me. And honestly, at this point in time, I don't even have a mortgage on any properties that I own. But I just want to read this email. Let's have a further discussion about it. It's from the CFPB, Consumer Financial Protection Bureau. States effective August 31st, 2021, most mortgage servicers must tell you about your repayment or other options when they reach out to you. So long as you are working with your servicer, in general, the mortgage servicer cannot start the foreclosure process before January 1st, 2022 without first either reaching out to you or evaluating your complete application for options to help you avoid foreclosure. Now it also goes on to say, we also made it easier for services to offer certain options without collecting a complete application from you. I mean, I wouldn't necessarily rely on that or trust it. I mean, I can tell you, doing several hundred short sales in the past real estate recession, the paperwork was just insane, and it actually turned people off and allowed their properties to go into foreclosure because the amount of paperwork that they had to provide, people just kind of gave up. So that's one thing that you definitely need to be prepared for, is providing a good amount of documentation. Goes on to say, with this flexibility, your servicer can get you into affordable mortgage payment plans faster with less paperwork for both you and your servicer. But if you don't respond to your servicer when they reach out to you, the servicer can start foreclosure. This is a clear indication that, what do we have? I think we have 2.2 million people in forbearance right now, and I think there's another 1.2 million people that are delinquent on their mortgage and have not taken advantage of any kind of forbearance. And basically, they're stating right now that I've been saying for months in the past, and I do have another video as well that you guys want to check out. I'll put a link for you guys. It's on the 5 forbearance repayment options. Be sure to take a look at that as quickly as possible. And what you guys want to do is you want to make sure that you guys are contacting your servicer as quickly as possible. Get the conversation going, because they are going to have a big backlog of people trying to do what's right and keep their homes and avoid foreclosure. So there's going to be a huge backlog of people reaching out right now trying to figure out what their options are. So start that conversation sooner than later. Now, some other things to take in consideration. If for some reason you lost your job and you took advantage of forbearance, or you got a job and it's not paying as much before everything that went down with the pandemic, or you're currently on unemployment and you can't get a job, if there's any reason why you have really no income or a little amount of income, or you're collecting unemployment, one thing that I would stress to you guys is, and if you guys don't have a plan of becoming employed and collecting as much money as you were collecting beforehand, I would strongly consider you guys reaching out to a real estate agent and figuring out the value of your property. Interview a handful of real estate agents, have them calculate a net sheet after all closing costs, what you would net at the end of the day, and see if you're upside down, or see what kind of profit you would have. I know in a lot of markets right now, we had the real estate values going up so high that there's a lot of equity in a lot of properties right now anyway, and I stress that right now. So if you can get ahead of the curve, and you guys are currently unemployed or whatever the case is, or financially distressed, you guys might want to put your property on the market right now while you still have equity in the property, and honestly figure out plan B, C, D, E, because I know a lot of people, they have concerns of where are they going to move to. And unfortunately, in the last real estate recession, the people that did not get ahead of the curve, they ended up staying in their properties, not paying their mortgages, and they were basically like, I'll ride this thing out as long as possible until till the bank comes, knocks on my door, and evicts me and throws me out. And I don't think that that's a good way to look at things, because you can get ahead of the curve in most cases. So if you guys are in that situation, if you guys have any kind of financial difficulties right now, I encourage you guys to get with an agent and consider, or go for sale by owner if you know what you're doing, and put your property out in the open market and get it sold as quickly as possible. And now, some things to take in consideration when you guys are selling the property are the closing costs. So, you know, you can contact your bank, get a bank payoff, and talk to them about exactly how much you owe on the property, including, if you did take forbearance, including what that forbearance amount is. So if you owe $200,000 and the forbearance was 20 grand, then you technically owe 220. And then let's say the current market value of the property is 300,000. 300,000 minus 220, you would think that you have 80,000, but you don't, because you have to take in consideration all closing costs. In your state, it's going to be different state to state. And also, if you guys do hire a real estate agent, you got to take in consideration commissions as well. So make sure that you guys do have a full understanding of the cost of selling your property. Now, if you guys are employed and you guys have a good job, and you guys do want to stay in your property and work it out with your lender, again, contact the servicer as quickly as possible. And then if you go to the CFPB website, I'll put a link for this as well. It shows the repayment options. I'll go through these pretty quickly, but also check out that other video where I break it down more in detail. But the first option is the repayment plan. So basically, it's just going to add an additional amount to your monthly debt position. Your monthly mortgage is going to add an additional amount, where it's going to basically have an amortization schedule, and it'll be paid off every single month until you pay it off completely. The next thing is deferral or partial claim. So this option will essentially potentially could create a second lien against the property, and then when you guys go ahead and refinance or sell the property, that will be owed, and you might not have to pay any interest on that second lien. It's just going to depend on your servicer. Also, keep in mind too, your servicer, all of them are going to be different in terms of what they offer. So this is not a blanket of every single servicer and what they're going to offer to you as well. That's why you got to contact them as quickly as possible to find out what your options are. The third thing is a modification. Basically, it's going to basically be modifying the actual loan. And again, a lot of these options are going to require a certain amount of paperwork, even though the CFPB is saying, you know, they're going to make it easy. You know, time will tell on that. But basically, a modification is basically creating an entirely new loan, and it's going to account for the mispayments as well that were the forbearance payments. And then the final option, or the other option, would be reinstatement, and basically that's just taking a lump sum and essentially paying off the forbearance amount. So those are your options. I got another video on this as well in terms of the 5 forbearance repayment plans. You guys want to take a look at that, and get on the phone. If you're in forbearance, get on the phone with your servicer today and start that conversation. And take a look at that video. I'll see you guys there next. Thanks a lot.